Let's talk about channels for a minute. Here we've got an upward trend, and as we discussed previously, we can draw a support line which represents a diagonal which is kind of guiding the price, and the price keeps bouncing off it in its journey to the top. Now what we're going to do is we're going to take this diagonal and we're going to copy it and we're going to put it above the price. So there it is. It's got the same angle as the first one, and it's sitting on one of the highs of the price. So once again, as you can see here, the price is also bouncing off this diagonal as well, and bouncing downwards. The price is kind of moving in a channel or corridor. Now what are we anticipating from the price going forward? Well, right now we are probably expecting for the price to bounce off the top border and then to go back up. This is where we would enter into a buy order. So once the price has bounced off, we would wait for it to hit this bottom border of the channel. We would enter into a buy order, and if the price goes in our direction, once it hits the top border again, that's when we would close our trade. So it's important to note here that in an upward channel, it is recommended to trade only buy orders. And why is that? Well, let's take a few steps back for a second. At this stage, we're anticipating for the price to go down. So we could technically conduct a sell order, but it's not advisable for two reasons. First of all, we'd be trading against the trend, and that's something we said we shouldn't do. We should always trade with the trend. And second, as you can see here, the downward movement is actually smaller than the upward movement. So in an upward channel, if you create sell orders, you will always earn less than if you create buy orders. So that's another reason why in an upward channel you should only trade buy orders. Next, we're going to look at a downward channel. So here we've got a downward trend. We can draw a resistance line. If we copy that line, we can see that very often the price will also follow the copied line. So it won't break through it, it will bounce off that line. And channels are very common on the Forex market, and you'll see this from our live trading on a real account further down in this course. So here we're expecting the price to go up, then we'll conduct a sell order, and we'll close our order once the price reaches the opposite side of the channel. So once again, in a downward channel, it is advised to open sell orders, because you would be, in this case, you'll be trading with the trend and you'll get longer movements. And so those are the two main ways of trading channels. It's actually one way, but in two different types of channels. And it's always trading inside the channel. And more often than not, the price does stay in the channel. But sooner or later, of course, the price will break the channel. And that's why there's an alternative strategy where, in this case, instead of opening a sell order, you would open a buy order, and you would expect the price to go somewhere out of the channel. You would use this strategy when your other analysis is telling you that this channel is getting too old and the price is going to break through it. So when a channel is quite new, there's more chances that the price will stay inside. When the channel has been around for a while, the chances of the price breaking out are constantly growing. Both strategies are valid. Depends on the situation and what your other technical analysis tells you. So to sum up with channels, direction, trade with the channel, stay inside the channel. It's more likely that the price will bounce into the channel. There's an alternative strategy, which is a breakthrough strategy, and that is used when you expect the price to break free from the channel.
Alright, so that was channels. Did you enjoy this tutorial? Well, if you did, then you might want to check out the full course. And the good news is that I've prepared an exclusive discount for those who have seen this preview. Just check out the link in the description of this video and you can get the full course with a massive discount. I look forward to seeing you in the course, and until then, happy trading.
How do I find out which Forex pair and time frame is best to trade? It's a common question all traders ask. Maybe you can figure it out the hard way by switching from chart to chart to find the trend, but if that's not hard enough, consider that markets change over time. A system designed for a trending market can turn into a trap which suddenly fails to make profit. Imagine if you could quickly scan all currency pairs and time frames to find the best trend and dramatically increase the profitability of any method you trade. If you're struggling with erratic market chaos when the trend direction is unclear, then this is the solution. So how does it work? Our powerful computers continuously work to find the best pair and time frame for you at any time. The result is the most clean pair and time frame with a nice trend, and this is the key to reduce unnecessary losses and increase your odds of winning by simply following the best trend. As you know, trading against the trend leads to loss after loss, but trading with the trend leads to profits, or at least increases profitability of any method or robot you trade. Trading within the range is unpredictable and risky, unless you know exactly what you're doing. The truth is that most Forex systems or robots make money with the trend, but lose money in a choppy market. But the tricky part is to find that good trend. Let me tell you one big mistake most traders make all the time. They're used to focusing on one specific pair and time frame. 90% of traders only trade the major pairs, mainly the euro, the cable, the Aussie and the yen. The reason is clear, it's beyond human power to watch all the currency pairs. The Forex Trendy tool scans 34 Forex pairs on all time frames from minute to monthly. It would take you hours analysing every single chart. Forex Trendy crunches all the charts within a second. You don't have to wait during the choppy market, just pick the best trending pair at any time. It scans even the exotic currency pairs, such as the Norwegian krone, the Sing dollar, or the Hong Kong dollar, which gives you a great advantage. You don't have to limit yourself to basic Forex pairs though. There are more trading opportunities out there. When one becomes choppy, throw it away and jump to another pair. Forex Trendy quickly gives you the next best pick. You can even set up audible alerts so that when there's a pretty trending trade, you won't miss it. The Forex Trendy application works independently from your trading platform. You can use your favorite trading platforms such as MetaTrader, NinjaTrader, TradeStation, etc. because the software is actually running on our computers located in Florida. No thick ebooks to read or complex software to install, just instant auto analysis of the cleanest pairs and timeframes with a nice trend. No matter if you're a novice or advanced trader, everyone immediately benefits from this smart application. Now a special bonus. Automated chart pattern recognition software that can recognize triangles, flags, wedges, and strong trend lines in all currency pairs and timeframes, so you're always prepared for every potential breakout. The audible alerts will tell you about the confirmed patterns in real time, so you don't miss the explosive price movements following the breakout. Your current approach is probably why you're not profiting consistently, or still looking for a better trading system. Are you doing the same thing and expecting different results? Forex Trendy is not a system, but a powerful trading tool that's designed to help improve the accuracy of any system or strategy that you're currently using.